Well, in a response to President Trump's broad tariffs, Business Roundtable CEO Joshua Bolten wrote the tariffs, quote, run the risk of causing major harm to American manufacturers, workers, families, and exporters. Damage to the U.S. economy will increase the longer the tariffs are in place and may be exacerbated by retaliatory measures. According to a report from the Wall Street Journal, corporate America is concerned about the president's trade policies. For more, I want to bring in Nick Timrose. He's the Wall Street Journal's chief economics correspondent. Nick, fantastic to talk with you this morning. I know that you have been speaking with corporate executives. You obviously cover the Fed very closely. I just want to get a sense. Have you heard anything different from corporate executives since these tariffs were announced last night? And what can you tell us?
Well, if there's any good news, it's that you now know, so the cards are on the table, and whatever uncertainty was there before, obviously it hasn't gone away, but you now kind of know what you're dealing with. I think the problem is that nobody likes what they're dealing with here. These are larger tariffs than what most people expected. These are larger than what Trump himself had run on during the campaign. You recall he had run on a 10% across the board tariff and 60% on China. It seemed like China, as was the case in the first term, was going to be the focus of trade policy changes in the second term. And so these tariffs announced yesterday, Madison, were just much larger than what people, even at the more pessimistic end of things, had been expecting.
Nick, where is the voice of the business community in all of this? I mean, I remember during past presidential terms, if there was something that the business community didn't like, they were quite vocal about it, or the Chamber of Commerce was quite vocal about it. Are you surprised that we're seeing it show up negatively in the survey data, but we don't hear a louder voice from the business community?
Well, I think you look at some of the other things the administration is doing, targeting universities that have taken positions that maybe the administration doesn't like, going after some of these big law firms. And so you may see a culture of fear. Nobody wants to be the first to file the lawsuit challenging the constitutionality of these tariffs. Nobody wants to be the one to stick their head out and have it get cut off. There could be some of that here. I think there's also been just let's see what this is before we go DEFCON 5 in fighting it.
And you had a piece out this morning in the Journal on how tariffs aim to create a new world economic order. Nick, it's not just the U.S. that is at risk of entering into a recession because of these tariffs. What are your sources telling you about the risks globally for an economic slowdown?
Well, it's not. It really isn't about sources at this point. It's about you look at what the markets are doing right now. The administration has been saying short-term pain for long-term gain, but the market doesn't see it that way. The dollar is down, bond yields are down, stocks are down. People are talking about higher inflation this year, but with more rate cuts from the Fed later on to cushion the hit to growth. I think what you see here is Wall Street going through the 5 stages of grief. Where we're clearly out of the denial stage now, but whether we're in anger, bargaining, depression, I think it depends on your perspective which one you're in. We're not at acceptance yet. That's what we're seeing happen this morning in the markets.
So, Nick, really quick, if we're going through those 5 stages of grief, what does it take for the corporate executives who speak to you anonymously and say that they are fed up with these policies to be a little bit more vocal in order to get the president to pause on some of these policies?
I think that's a great question. I don't think we know what it's going to take. And we're sort of in uncharted waters here.
Yeah.
So we'll just have to wait and see. I think that's the right question right now is people are asking, where is the Fed put? I think the question is, where is the White House put? At what pain point do members of Congress and businesses begin to put pressure on the White House to negotiate or do whatever is going to happen here?
Nick, got to ask you about the Fed, my favorite Fed correspondent. We're hearing from Powell tomorrow. How do you think he's going to respond to this, and where do you think this puts the Fed moving forward?
Well, it puts the Fed in a very difficult position. That much is clear. As to what Powell says, he's been very careful recently. There isn't a big incentive for the Fed right now to be drawn into something that is the administration putting out these policy actions that the markets don't like. So the Fed at a certain point will have to react to weaker growth. But if inflation's going up, it gets awfully harder for them to do that. One other point I would make is that, what do rate cuts accomplish? They help interest rate sensitive sectors of the economy like housing and autos, but those also happen to be two of the most trade affected sectors. So people here thinking that the Fed can run to the rescue, I would sort of curb your enthusiasm about that. If housing, costs to build houses, costs to put together cars are going up, I don't know what interest rate cuts are going to do to cushion that hit.